Our Black Friday sale is now available on the website for the remainder of the month. This will apply on the ebook, course and mentorship plans. Private message me on Twitter, links down below for more information, or head straight to the website. Welcome back to another Kaspa update. Thank you so much for joining in. When we're looking and zooming out at this larger time frame chart, we can see that we are still in technical targets to $15, $22 and $26, simply because back in July time we created the reversal wave right over there, and it's since July we were able to say it's in a target to 26 cents as the reversal wave is created. And as long as you maintain that area, also marked out at the bottom of the golden pocket, this purple line over here, we should eventually continue to all targets. And we did have a scare over here with some huge bearish signals flashing, but we didn't actually manage to completely lose the trend line over here. The moving averages, the 55, we did actually come beneath on two separate occasions, but very swiftly reclaiming them, looking for bullish continuation. And we're now seeing that continuation to our technical target. So we're going to analyze this in today's video. We'll also scale down to the lower time frame, so please make sure to stay tuned and like, subscribe, comment and share so we can hit 7,500 subscribers before the end of this year. I've also got my discounts that last until the end of this month on my course, mentorship and ebook if you want to take action using the links down below. So on the daily time frame, we can see that we are still above the 20. For me, this is what's suggesting the immediate short-term trend. So as long as we're holding above this, eventually we should just continue up over the next days or so. Now, yes, we've been held up here for about a week and a half. So it's quite annoying that it's done so, but it's given the 20 moving average time to catch up. As this was pumping up aggressively, it left the 20 moving average behind. And as we went sideways for about a week and a half, we can see that it's eventually dragged up above these key supports that we need to hold. And if you remember a few updates ago from last week, we were suggesting when we started to come back down over here that we needed to very swiftly reclaim the 55 moving average and not lose this level over here, which we can see has of course been held, and then followed by a reclaim of the 55 and 20. So you're looking just to continue with a bullish continuation. However, there were things in the way that we mentioned in the past updates, such as the Fibonacci. So the Fibonacci is going from the top to the low over here, and it's telling us that this area is the golden pocket. Now, what we want to see is breaks through the golden lines, and that's what we saw. So we could then say, okay, potentially the reversal wave has been created, and then we're looking for our 20-25 cent target to eventually get met. However, what's happened over here is not the final confirmation of the reverse wave. So it's good that we validated it by breaking through, but then now can we hold it as support and see a break of the 786? And as you can see, we failed to push through the golden pocket and the 786, and with that we're not confirming the reversal wave, and the reversal wave is the bullish direction. So if we're not confirming bullish impulses, then don't expect upside. And so that's why we've seen a dump. And again, I'll just reiterate that we need to continue to see this level being maintained. As the days have gone by, the weeks have gone by, we can see that the 200 EMA has been dragging up as this has gone sideways. And now this is almost in line with the lowest wick of this whole entire range. So that's why this purple box is drawn out to that wick. As we know, a close beneath the body here would send us down to this level. But if we do not close beneath that body, this body right over here, then we're not going down to that level. So you do the opposite. We reclaim the 20 and we continue higher. Same situation over here. We need to lose this area to get a dump down to the lower end, where we'd come to the 200 EMA and that would bounce us back up. But as we never lost those body candle closes, then we just get pushed back above the moving averages, attempting to create the reversal wave. All we now needed to see back over here on Saturday was a push through the golden pocket and the 786. Everything was setting up correctly, but unfortunately, as we didn't get that follow through, this is maintained as resistance, and we're not yet on that bullish path with shadows cast over our heads, with potential of coming lower, of course, clouds over our heads, sorry. And so while we are beneath the moving averages again, it is a signal for continuation down to the 200 EMA, and I'm happy that it's been given an opportunity while this has gone sideways to catch up with the range. And so essentially saying that if we do even dump down to there, that this would serve as our bottom in line with that wick. So we know that for the moment, in terms of worst case scenario, for the bullish case, we'd be coming down to here and then reversing continuing higher. So that's the worst case for the bullish, for the bulls. So technically you could come down to there and we're still technically bullish, but of course understand that if we ever do lose this, we're changing the trend from uptrend into eventual downtrend. While we are still above it right now, I've got no thought in my mind that we are continuing lower below this point. As we are above this and we've been continuing an uptrend since July, as I showed you, the reverse wave was created, then we're just looking for continuation higher as long as this is being maintained. As we've been up above it for months and months and months, I'm just anticipating for it to hold. Now, we don't even have to get down there. This is just going to serve as the bottom of this uptrend, so the lowest point of keeping this all bullish. And we don't have to actually go down there. Right now, we're about to see a potential EMA repel. What needs to happen for this to occur is a failure of a crossover. Can you see these were almost crossing over but failed to do so? And what happens is you get slung straight up. So right now, we're forming a potential double bottom over here on a key Fibonacci level, the golden pocket, as well as the 786 fib. So as there's a bit too much on the chart right now, what I'm going to do is draw a little box right over here so we know that this is the golden pocket and needs to be maintained going forward in order to see a potential break of the upside. So we've come down right now, although yes, it was not bullish by breaking through this. We're not being given a green light to continue higher, in turn making this potentially bearish, or at least bearish until the lowest point of our uptrend, which would send us higher. So the stance is that if we go ahead and continue to stay beneath the moving averages here and we do get a rejection and we fail to break through this level, we're attempting to go down to the bottom of our uptrend, in turn the bottom being the lowest support, and then flipping us back bullish again. So it could be short term down to eventually continue higher to 20-25 cent. But if we actually now continue to hold this with this double bottom and we see the breakout close above the 20 moving average and we do get an EMA repel, as we saw here with the failed bearish cross, then we would need to see a slingshot motion happening right now over the next, or over the rest of the day, as they're about to cross over here. So we need to invalidate that. We need that not to happen. And in order to do so, we need to find some bullish signals, some bullish patterns, or anything that is bullish over here. So first of all, we'll start off with the golden pocket that is showing us support on the left. We need to maintain that. At that golden pocket, we formed a bullish pattern called a double bottom, and the neckline is actually the 20 moving average. So all we need to do is close above the 20 moving average, make sure with that we don't lose it as support once it's been reclaimed, and then push through the golden pocket and the 786. So once 14 and 14.5 cent is cleared, then there's no stopping us for getting to 20 and 25 cent. If we now actually get pushed back underneath the 20 and this gives in, then it's looking for a correction back down to 11.2 to 11.5 as a key area of support. Lose that, it's back down to the 200 EMA. We don't necessarily need to go down to the 200 EMA, but it'd be fine in doing so. And what I would personally like to see is this golden pocket continue to hold for an eventual break of the higher golden pocket, creating the reversal wave for targets of 20 and 25 cent to eventually get met. And these would of course be moves of around the percentage gain of 22. Let's go to 20 cent. 20 cent here would be a 55% move, and 25 cent would be a 100% move over here. So yeah, let me know your thoughts in the comment section below of which one you think is going to happen. I personally believe that as long as we continue to hold this, we will see eventual breaks of this high and continuation higher. The loss of this will send us back down to the lower end of this uptrend, the bottom of our uptrend. Again, technically, as long as we're holding above this level, we won't even actually go down there. So I'm just hoping that we do hold this as support for the continuation higher for all us Kaspa holders. Thank you so much for tuning in. Like, subscribe, comment, share so we can hit 7.5K before the end of this year. And I do still have discounts on my ebook, course, and mentorship. Use the links down below to get over to the website, or private message me on Twitter. Our Black Friday sale is now available on the website for the remainder of the month. This will apply on the ebook, course, and mentorship plans. Private message me on Twitter, links down below for more information, or head straight to the website. Cheers everyone.